What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future. I'm also going to break down what the technicals are showing for the market and Tesla, and also why tomorrow is going to be a massive day as we have the PCE inflationary report coming out, and this is going to be huge because if you don't know what this is, PCE is another inflationary measure, and it will affect the trajectory of the Fed, the economy, the stock market, and Tesla going forward. I'm also going to break down its significance and what on earth is going on with the news as we have some big headlines coming out for Tesla. Now, before I break any of the headlines down, before I talk about the PCE report, why this is going to be massive and how this can affect Tesla for tomorrow, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you could always sell these 6 free stocks for cash and use that cash to buy some Tesla shares for free in this limited time offer that ends tomorrow. So please check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla from a technical perspective, it's actually looking pretty good right now because when I zoom into the chart, okay, this thing was dropping and it ended up bouncing off 666. Now, I predicted that Tesla would bounce off 662. That was very close to where it actually bounced from. And after we got that nice bounce, we started to kind of push up a little bit. Now, what else is very interesting is we have a gap up here. And as of right now, it does look like Tesla is on the way to fill that gap. Now, there is something I need to account for, and that's the PCE report. I'm going to talk about that in a few minutes, but from a technical perspective, Tesla does look a little bit more on the bullish side than bearish side. It's even kind of green in the after hours. And for SPY, you'll notice something else that's interesting, and that is if I zoom out a little bit, you'll see that we had this gap down here around that 378 range. So I predicted that the SPY would kind of get a bounce between 378 and 375. And I did predict we'd fill the gap. That is what ended up happening. And if you look at the SPY from a technical perspective, okay, we filled the gap. We got this nice double bottom that formed. And then we're starting to respect a bit of an upward trend. And we're kind of green in the after hours. So the SPY does look like it might test 378 again, maybe a little lower, but it does look like it's showing some strength to kind of continue to the upside for tomorrow from a technical perspective. Now, note what I'm saying. I'm talking about technicals. I'm not talking about all the news, the PCE report just yet, just from technicals. And from the technical perspective, we could also look at what the NASDAQ is showing. I predicted the NASDAQ would get a bounce around $11,033. It ended up bouncing at $11,072. So I wasn't that far off, but then after it got a nice bounce, it started to kind of upward trend a little bit. So it does look like it has a little room for a slight bounce. I mean, it was just barely in the red, down 0.03%. So overall, I mean, technically, the market does look a little bit more on the bullish side. It looks like we might see a little relief for tomorrow, but there is one problem with making this claim, and that is the fact that, look, technicals are great. They tend to be correct, but there's something else that's coming out, an external factor that will affect the markets too, and that is the PCE report. Now, before I talk about the PCE report and how this may affect the markets, I want to address something else that I mentioned earlier this week. Now, I was under the impression that we could see some bullish moves for the end of June due to potential rebalancing, and that is very much a possibility. But then when you look at the chart from a different perspective and you look at the end of the quarter back in March, we saw Tesla around that. We saw this big rally that kind of pushed us up, and Tesla was around 1,090, 1,085 a share during that time frame. Now, we're really in the red compared to that time. So I don't think even if we moved up like 10%, I don't think it's going to make that huge of a difference. I mean, maybe to some degree, but to me personally, I think I put a little too much emphasis on that. So I do apologize for that. But at the end of the day, I mean, it's possible it may push us up a little bit, but I just think that there's going to be a lot more merit on the PCE reports than that overall. So when it comes to something else that's big for the markets, I wanted to just mention this. A survey found that about 18% of Americans plan to increase their stock market investments this year. I don't see this as a good thing. I think that this is the time to be greedy. It's a very good opportunity to buy these dips for the long term. And by the long term, I'm not just talking about 10, 20, 30 years, even for just 2 years into the future, I think the market will easily recover. And I think more Americans should get involved. So that's the reason why rebalancing may not be as prominent, as a lot of people are kind of scared of the markets. But at the end of the day, it doesn't matter. We are going to recover eventually. I just wanted to put that out there. Now, Jerome Powell was also speaking today. All right. And he did say some very, very interesting things. First off, he did vow to prevent inflation from kind of taking a hold on the US for the long term. And he also mentioned that it's going to be a lot more difficult than many would have anticipated for us to have a very, very soft landing. So he did mention some kind of hawkish things, but at the same time, he mentioned something else that a lot of people overlooked. And that was, he believes that there's a possibility, and this is going to get a little complicated, but let me explain this. So when you look at this from an economic standpoint, the demand, people have high demand for things, for goods, for buying things, right? And with these high gas prices, with high inflation, the supply chains have been disrupted, but they're, excuse me, they're kind of stagnant, and they're not necessarily keeping up with that demand. So he doesn't expect our supply chains to just decrease like crazy over the next 6 months. He's saying that it may actually remain kind of stagnant. So supply could kind of remain stagnant, but demand, if we enter a recession in the next 6 months, demand could drop. And if that is what ends up happening, we could actually see inflation drop faster than some people expect. Now, is that guaranteed? The answer is no, but it is a possibility. And if that does end up playing out, right, if we enter a recession, people start spending less money into our economy, inflation starts to drop faster than some people expect. If that happens, that would be bullish for the markets, because we could see the Fed become more dovish more quickly. So I just wanted to call that out. It's a possibility. It's something that the chairman said, so I want to just call that out. But without further ado, I want to talk about the PCE report and why this is going to be big for the markets. All right, so if you've been paying attention to finance or our economy, you're going to know that there's a core PCE and core CPI report. Now, CPI is another inflationary measure that tends to kind of either understate or overstate inflation. Both of them can be manipulated, but PCE is another measure that's often accepted by many economists. So there are differences between the two of them. And if you actually look at them historically, they tend to be similar. You can see how similar they tend to move, but they do put weight on different things, as these articles are basically showing. Now, PCE is based on surveys of what businesses are selling, whereas CPI is based on what households are buying. But another thing that's important is, if we actually look at this, I think right here, you could see that the reason why we're seeing PCE a little bit lower than that of CPI is because PCE data tends to not put as much weight on gasoline. So they're both inflationary measures, but PCE does not kind of put so much weight on gas or other things like that, like rent. So that's the reason why CPI tends to be higher, but CPI is more accepted, but PCE also has merits too. So PCE is coming out tomorrow. I just want to inform everyone about that. And now I want to talk about how this may affect the market going forward. So this person known as John at The Rock Trading Co., and I apologize if I said that wrong, they did a pretty decent job at actually clearing this out for everyone to see. They basically showed us that PCE tomorrow is coming out at 8:30 a.m. Eastern time, which is 1 hour before the market ends up opening. So that's going to be very important. And he kind of mapped out the different rates we could get and how they could affect the economy, the stock market, and Tesla as a whole, right? So let's actually look at the data right here. So check this out. This is the PCE report, and you'll notice we got this big spike in 2022, a huge spike a little bit later on, and you could see it went really, really high, especially around February to March. That's when it kind of like peaked. And since then, we've actually seen it starting to decrease a little bit. So once again, this doesn't account for gasoline as heavily in some other expenses, which is why you could argue the data is manipulated. But this is something that is accepted by many investors and economists. So we still have to go based off this data, regardless of the manipulation and other things like that. So if you look at the data, okay, back in March 31st, 2022, it came out at 5.4%, which is still very high. And it was still so high to the point where the market didn't like that. But then by the time we got to like April, April, we actually saw a decrease to 5.2%. Then by what is that? May, it came out at 4.9%, reaching the forecasts. And you could see the forecasts tend to be very, very close to what the actual reports show. Now, what's interesting is the next forecast is a 4.8%. So we're looking for that continuation of the downward trend. And I think that is going to be the most important number. So let me talk about this. If we hypothetically get the PCE report tomorrow, all right, in the morning, and it comes out at 5% or higher, I think it's very possible that this person is correct. The market is going to take a hit. The bears are going to gain control, and Tesla and the overall market are going to take a big hit and start dropping. I think the SPY is going to start dropping below 378. Tesla is going to drop below 650 in my opinion, or maybe come very close to that, but I do see a lot of red coming if we get a very bad PCE report. Once again, it's another version of an inflationary measure. Now, do I think that's going to happen? I think it's very unlikely because historically, when we look at the forecasts and the projections right here, you could see the forecasts tend to be very close to the actual data reports that come out. So it wouldn't be surprising if we actually get something very close to what the forecast is. And once again, it's at 4.8%. So what would happen if we get like 4.9%? And this person stated that it would send the bears to the moon for the rest of the week. This means that the market would stay red for the remainder of the week. And I could kind of disagree with that. I think we'd kind of see some sideways choppy action, maybe some downside. So I do agree and disagree, but I don't think it's going to be as horrible as some people would think because it's not that far off. And we've seen when CPI reports are a little bit off, it doesn't have as big of an effect. Now, here's where things get very interesting. What happens if we actually reach the 4.8% forecast? And this guy named John claims that he thinks that the bulls would gain the edge for the remainder of the day. I don't really think that. And the reason why I disagree with that part in his analysis is because when you look at the data, you'll see we got 5.4, 5.2, 4.9, then 4.8% would actually show a declining trend continuing. So that could actually be looked at as a pretty decent sign. And we'd see these bars still getting smaller and smaller, which is an indication that inflation through many sectors would be going down. This doesn't include all sectors. It doesn't account for gasoline as heavily, but through other sectors, it could be a pretty decent sign. So with that said, if we get 4.8%, I would expect Tesla, and I think that's what's most likely going to happen. I think Tesla's actually going to push up a little bit, maybe trade kind of sideways, be kind of choppy. But near the end of the day, we could get a push and fill this gap, get rejected, and maybe close around the high 600s. Now, as I mentioned before, right, if we end up getting that 4.9% or something even higher than that, right, the market could kind of remain kind of choppy. It could be horrible. If it's 5%, the market is probably going to take a big hit. Tesla's going to drop. But what if it's 4.7%? What if we actually see a much lower, or I should say a lower than anticipated PCE report at 4.7%? What is going to happen if this number actually is lower and inflation is shown as lower than some people would anticipate? The market is most likely going to rally, in my opinion, because it would show that, well, some sectors of inflation are going down. That's a good sign. Some people will try to correlate it with what the Fed is doing. I think Jerome Powell did mention that what he's doing right now is not going to really bring inflation down that hard for the short term. So I can't truly say his, 75 basis point hikes are going to play that big of a role, but some people are going to get, hopeful and excited. So it could actually cause the market to rally. So just to clarify, if it's 4.7%, the market should rally. 4.8%, Tesla could trade kind of sideways, maybe push up a little bit. 4.9%, we should see some sideways action, maybe some red, a little red here and there. And if it's like 5% or higher, the market's probably going to take a big hit. Tesla's going to fill the gap at 650, may even drop a little lower than that. So I just wanted to prepare you guys for this. I can't make a perfect prediction, but I did go over the hypotheticals based off what the possibilities are and based off what I think is going to come. What do I think is going to come? I think the report is most likely going to come very close, let me see right here. So the forecast of 4.8%. So I do think it's very possible Tesla continues this upward trend and actually ends up filling the gap at 700 for tomorrow. Now, with that out of the way, I want to talk about one other very important thing, and that is there are reports saying that Tesla is cutting about 200 autopilot jobs and closing its office in San Mateo, California. Now, I want to clarify something because I do see something that may be kind of contradictory, and that is the fact that they mentioned that I think right here, one employee told CNBC that much of the staff in San Mateo had expected to be moved to Palo Alto or to another office, but not lose their jobs. So my question is it really true that 200 of them are going to be losing their jobs? Is it true that all of them are going to be kind of like relocated and not losing their jobs except for 200 of them? I'm not 100% sure about that, but I do think that other reports are showing something similar, and that is some job cuts for Tesla. And I think Elon Musk did clarify different claims previously. There are going to be some salary cuts here and there for Tesla, and perhaps some more job cuts. It is a possibility, but you also have to remember that the company is still growing and they're still expanding their headcount. So it's still going to show increase. It's just that the rate in which they're increasing may not be the same as before. And that is in anticipation of a potential recession or other issues like that. Now, with supply chains still showing some issues, it wouldn't be surprising if we continue to see articles like this, maybe some more increases in the price of Teslas. It's just okay, nothing to worry about. Is it confirmed just yet? Not necessarily, but it is something to be prepared for. So that's essentially what I have for this one. But with that said and done, like I said, from a technical standpoint, it did form this double bottom. It does look like it should continue to push up, but it does depend on PCE data as well. So be prepared for that. With that said and done, I did go over the hypotheticals. If PCE is really good, right, Tesla's going to fill the gap up here, continue to rally. If it's decent, we could still kind of fill this gap, but we should expect some sideways action. If it's a bad report, right, if PCE is too high at 4.9 to 5% or higher than that, Tesla is most likely going to keep dropping and fill its gap down to that 650 range, or even go lower than that if the market does take a bit of a hit. So with that said and done, thank you so much for listening. I could go into more detail about this, but I just want to keep this a little bit shorter. Thank you for listening. Have a great rest of the day. Be prepared for anything, and I will definitely see you guys in the next one. Tesla to the moon, and peace out.